And this afternoon we have, well, several great speakers, but first the man who needs no introduction, but I'm going to give him a little bit of one anyway. He has taught at Columbia University, University of North Carolina, Lewis and Clark, and the University of Utah, and he's also been a professor in residence at the Office of Chief Counsel for the Internal Revenue Service. Professor Larry Zelenak is going to be speaking to us today about the federal retail sales tax that wasn't, an actual history and an alternate history. Professor Zelenak.
I apologize for not having hooked myself up ahead of time. I should have done that. Let's see. Okay, ready to roll. Well, as many of you knew before you arrived here today, and as all of you know by now based on some comments speakers made this morning, the federal income tax did not become a mass tax affecting the majority of the U.S. population until World War II. And the way that happened is my topic today. I think it's at least the second most important development or moment in the history of the income tax, rivaled only by 1913. And although I won't try too hard to persuade you of this next point, I actually think it's, if anything, it's more important than 1913. Maybe to try to persuade you of that just a little bit, I'm going to take a roundabout approach and talk for the first 5 or 6 minutes not about this paper, but about the introduction to the symposium, which I've written and still in draft form and not suitable for public viewing, but I can tell you a little about it. I decided we'd done enough history between the terrific papers that you've already heard about and the ones you're going to hear about, and it was time to look in the other direction and do some futurology. So I asked the question, sort of half seriously, in this introduction, how likely is it that in 2113 or thereabouts, issue 100 and God knows what of a Law on Contemporary Problems, will be having a symposium celebrating the 200th anniversary of the federal income tax? That's sort of a rhetorical construct in the sense that you know, to be a little more realistic, my crystal ball doesn't go any farther than 20 years out at the most, and you know, in 100 years we'll probably all be underwater anyway. But it has a nice round ring to it. So that's sort of upping Ann's earlier question by 50 years, and you know, asking about 100 years in the future rather than 50 years in the future. And I think to try to answer that question, the first thing you have to do is ask a preliminary question and try to answer that, which is, well, what do you mean by the income tax? I mean, what are the crucial features of the income tax that define it so that if we still had those in 50 or 100 years or whatever, you could say we still had the income tax? And, you know, an economist or a academic tax lawyer who thought reasonably enough that when you say income tax, you mean a tax that's imposed on a base that resembles something like the Haig-Simons definition of income that Rich was talking about, would say, well, it has to tax income. In particular, it has to tax labor income and investment income, both, and it has to be distinguished from a consumption tax. But you know, in terms of the social and cultural meaning of the tax, I think that's actually pretty far down the list, and this is obviously just sort of introspection, and it may be wrong, but I think that the 4 features that really define the tax for most people today are, 1, that it's a mass tax; 2, that it's a direct tax, and by that I mean that it's imposed directly on individuals in the sense that they're the nominal taxpayers, rather than, in contrast with a value-added tax or sales tax, for example. 3, that it has progressive marginal rates, and 4, that it's larded up with a bunch of tax expenditures. And if you were going down the list, eventually you'd get to the fact that the base is nominally at least income rather than consumption, but I think that's below these four, maybe below a few other things as well for that matter. And when I thought about it that way, and you look at the leading contenders to replace the income tax, and you try to speculate on what their prospects might be over the next 20 years or so, I think that the chances of the income tax so defined surviving for the foreseeable future with at least a majority of these features intact is actually pretty good. Okay. Well, I may be wrong, who knows. But anyway, to take this back to World War II, if you're sort of with me so far, of these four things which I think are the social and cultural defining features of the income tax, one of them, the fact that it's a mass tax, didn't happen until World War II. And the other, I'll argue later, the fact that it's larded up with all kinds of tax expenditures, didn't happen in a big way until after World War II, and I think happened only because it became a mass tax. So, if you think these are in fact the crucial features of the income tax today, then two of them at least are attributable to World War II. So, what the paper that I'm supposed to be talking about, and that by the way, what I just did was partly for Steve's benefit, because he was mentioning that this will be the second time he's heard me talk about this paper. The first time he actually had to be the official commentator on it, and I thought I should say something I hadn't said before. So. But sorry, Steve, that's the end of the new material. So to go back to the paper I'm supposed to be talking about, as the United States entered World War II, it quickly became obvious that it needed tremendously more tax revenue than it currently had, and that the only way to generate that revenue was through some form of mass taxation, a class-based income tax imposed on only the top 20% of the population or thereabouts simply wouldn't be enough. You had to have some federal tax to help finance the war that was imposed on the substantial majority of the population. But it wasn't at all obvious that that necessarily meant an income tax. And in fact, it's pretty clear that in the absence of the hostility of the Roosevelt administration, primarily personified by the president himself and his Treasury Secretary Henry Morgenthau, that there would have been a federal retail sales tax enacted during World War II. A majority of Congress spoke out in favor throughout the war in favor of sales taxes. Opinion polls consistently showed a majority of the population favored a federal retail sales tax, and opinion leaders, editorialists in major newspapers and so on, consistently favored it as well. But FDR did not, his Treasury Secretary did not, and as a result it didn't happen. So let me sort of tell you the story fairly briefly, because I think there's two key moments in this story of how the federal retail sales tax didn't happen. The first is in early 1942. At that point, the Roosevelt administration was unwilling to accept the inevitability of either a federal retail sales tax or a mass income tax. They still thought or hoped they could finance the war through class-based taxation alone. But rumblings in Congress made it pretty clear that Congress disagreed, and it looked like, left to its own devices, Congress was fairly quickly going to enact a retail sales tax. Whereupon, in May of 1942, Secretary Morgenthau climbs Capitol Hill and tells Congress he's changed his mind. He's now in favor of substantial reductions in income tax exemption levels, which, if enacted, would take the income tax a long way towards becoming a mass tax. And it's clear that the reason he did that was to forestall a retail sales tax. He thought if he thought that if there had to be mass taxation, or if Congress was going to insist on mass taxation, that a retail sales tax was the worst form and the mass income tax was the lesser of two evils. Whereupon he announced, as if he thought this was a good thing, which you wouldn't have expected him to have said even a couple months before, for the first time in our history, the income tax is becoming a people's tax. Sounding like he's celebrating that fact. Well, what eventually came of this was the enactment of the victory tax, which lowered the exemption levels of the income tax even more than the administration had requested, to $624. If that sounds like an odd number, it's 12 times 52. And above that, the victory tax imposed a tax on income at the flat rate of 5%, and then of course there was the regular income tax above that. Once that became fully effective, which didn't happen until 1943, almost 70% of the population was covered by the income tax. So almost 70% of the population was either an income taxpayer or the dependent of an income taxpayer by 1943 because of the lowered exemptions under the victory tax. I should have mentioned before when I was describing the exemptions that they made no allowance for family size. So whether you had no kids, 1 kid, or 10 kids, everything above 624 was taxed at 5%. And that's really, in a nutshell, how the income tax became a mass tax. It was the victory tax enacted in 1942, effective in 1943, that did that. And it was the result of Morgenthau's proposal in May of 1942 to lower exemption levels in the income tax as an alternative, as a way of forestalling the introduction of a retail sales tax. One other significant moment in this story, October 1943. It's clear that even more money than is being raised by the victory tax is necessary for the war. Morgenthau tells Congress the administration wants taxes to raise another $10.5 billion, which doesn't sound like much now, but it was then. And Congress quickly made it clear to the administration that the only way it would consider even coming close to the revenue request was via the enactment of a retail sales tax. And basically, Congress has presented the administration with an ultimatum that you can have a retail sales tax and raise the revenue you want, or you can say no retail sales tax and we'll respect that. We won't try to enact one over your threatened veto. But in that case, we're going to raise about $2 billion of revenue instead of about $10 billion of revenue. There is what I think is a striking moment in the hearings when Morgenthau appeared before the Senate Finance Committee in November of that year. He made his prepared remarks, repeating his request for $10.5 billion in new tax revenue. Senator Arthur, the House, I should add, had already passed a bill which raised about $2 billion and didn't include a sales tax. And Senator Arthur Vandenberg asked Morgenthau, well, would you prefer, quote, a bill approximately similar to the House bill in total revenue or the House bill plus a general sales tax? Morgenthau responds with the administration's usual list of objections to the sales tax, which, by the way, I'll get to in a little while, and concludes, for the above reasons, my answer to the senator's question is no, we would prefer not having a sales tax. Whereupon Senator Byrd, not the current one, although almost, quotes back to Morgenthau the last sentence of Morgenthau's prepared statement, which was, I have endeavored to show you as objectively and as clearly as I can that a tax program of not less than $10.5 billion is needed to safeguard the financial and economic future of this country during the war and after the war. And Byrd then says, that's pretty strong language. As I understand the Secretary, he thinks the objections to the sales tax are greater than the necessity of safeguarding the financial and economic future of the country if the sales tax is determined by the committee in Congress as being the only means of raising this additional revenue. And Morgenthau basically assented to that. And the end of the story is Congress passed a bill raising about $2 billion of revenue, no sales tax. president vetoed it, and it was eventually enacted over the president's veto. I think the first time in history of the United States that had happened. And that was basically the end of the sales tax for the rest of for the rest of forever, apparently. So, what's the lesson of all this? Well, I think it's absolutely clear that but for the administration's hostility to a sales tax, the United States would have ended World War II with a federal retail sales tax. It's not at all clear whether it would have had a federal retail sales tax and a mass income tax as well, or whether the federal retail sales tax would have been the only form of mass taxation. I think it's quite plausible, however, that the retail sales tax would have been the only form of mass taxation at the end of the war. So we would have had a retail sales tax plus a class income tax imposed on only maybe the top 20% of the income distribution. Okay. Now I want to talk about what would have happened after that, but I need to go back for a moment and explain the best I can, which isn't very well, the nature of the administration's objection to a sales tax. Okay. Well, the stated objection was that sales taxes are regressive and the distributional impact of a sales tax would be unacceptable. But it was pointed out by everybody from the Brookings Institute, well, maybe that's not a very long distance. I was going to say everybody from the Brookings Institution to the New York Times. Let me rephrase. It was pointed out by a whole bunch of people, including the Brookings Institution and the New York Times, that that there was no reason that the combination of, well, back up. It was pointed out that it was perfectly practical to introduce a retail sales tax under which people would be given coupons entitling them to purchase free of tax some basic subsistence level of consumption, and the coupons could be set at whatever level you would set the exemption under the victory tax, and because of that, there was no necessary reason why the distributional impact of a retail sales tax plus a class-based income tax had to be any different from the distribution of a mass income tax standing alone. So the distributional argument really doesn't make sense. And people were saying at the time, it doesn't make sense. So what was going on? Frankly, I'm mystified. I honestly don't get it. I'll offer a couple speculations, but I really don't know. One is that while taxes were important, they weren't the most important thing going on. Roosevelt had a lot of other things that were demanding his attention more than the tax structure. He had long ago developed an almost gut level, not almost, a gut level abhorrence of sales taxes on the grounds that they're regressive. He didn't have the time or inclination to rethink that during the war, and so he just stuck with his old position. That's one possibility. Another possibility, if I remember right, I think Steve actually suggested, is maybe this was actually motivated by his concerns about how labor unions would react to a federal retail sales tax. That's certainly possible, although two things I would say about that is one, I read everything I could find on this issue and really found nothing substantial to suggest that, although it may have been done, you know, through not so public channels. And secondly, even if that turns out to be true, it only sort of moves the irrationality from one locus to another, because then you'd have to explain why labor unions were so opposed to it when they weren't so opposed to a mass income tax that would have had basically the same distributional impacts, and I don't know how you explain that. Now, all of this is not to say that I think that Congress necessarily should have enacted a retail sales tax during the war, or that the administration, you know, made some terrible mistake by preferring a mass income tax. There are, you know, non-trivial sort of second-level concerns about administrability, and you know, is it easier to administer a retail sales tax especially given that states already have some experience with that? Or is it harder to administer a retail sales tax than a mass income tax because the federal government's at least been doing a class income tax for a long time, doesn't have any experience with retail sales taxes? Is a mass income tax worse because it requires people to file returns, or is that actually a good thing because it makes them feel more fiscally involved as citizens? And so on. So there's a lot of, and each tax has its own peculiar opportunities for cheating and its own peculiar administrative problems. And you could rationally think on balance one or the other or having both together was better. So I'm not saying this was necessarily wrong to prefer a mass income tax, but I'm saying to oppose it so extremely, even at the cost of foregoing revenue that you had just told Congress was necessary to win the war and preserve Western civilization, it's kind of odd, and especially when the stated distributional reason simply doesn't hold up. So in short, I don't know. I don't get it. It's a mystery to me. But what I want to spend the rest of my, I'll be quick, is a little. I used to call this alternate history. But I realize that has kind of a science fiction ring to it, and also lends itself rather easily to mockery. Some of you may remember Thurber's essay about if Grant had been drinking at Appomattox, the end result of which is he would have surrendered to Lee. And the Saturday Night Live skit, which seems oddly on point in this context, how would World War II have been different if Eleanor Roosevelt could fly? But answer not that much, actually. But then I learned, and I think I owe this to Ted Cito, that you can make the same points and call it an explanation of the path dependence of history, and nobody laughs at you. So we're going to call this. So we're going to call this path dependence. But here's the point. So suppose, which seems plausible, although I don't claim it's certain by any means, that if the Roosevelt administration had not somewhat irrationally opposed federal retail sales tax during the war with such fervor, we would have ended the war with the federal retail sales tax as the only federal mass tax for general revenue purposes, and with the income tax retaining its position as a class tax on the economic elite. And suppose also that the combination of the two taxes would have had the same distributional overall effect as the actual mass income tax at the end of the war had. How would things have developed differently in the 6+ decades since the end of the war? And Joe was talking earlier about Presidentist agendas. There's a Presidentist agenda of sorts lurking here, because some people, most prominently Michael Gratz, have proposed that the United States, in an article titled, I think soon to be a book and perhaps ultimately a major motion picture, an article titled 100 Million Unnecessary Returns, and the proposal is to take the income tax back to its class tax origins, make it a tax only on the economic elite again, but at the same time introduce a value-added tax, which is sort of a more sophisticated version of a retail sales tax, and make it distributionally neutral with current law. And the major selling point, according to Gratz, is what the title suggests, getting rid of all those tax returns. But he says, it doesn't change anything substantial because it would be, by design, revenue and distributionally neutral compared to current law. So what would be at stake in doing something like that? Well, the second part of my paper is speculation on that question. And I'll give you the conclusions very briefly without trying to justify them in a couple areas. One is I think the post-war politics of tax cuts and tax increases would have been very different under a two-tax system than under a one-tax system. The dominant paradigm post-war for tax cuts has been reducing everybody's income tax liability by the same percentage, which of course means richer people who started out paying a lot more dollars of tax than poorer people get a lot more dollars of tax reduction under this equal percentage paradigm. Would the same thing have happened under the two-tax system? I don't think so, because the first thing you'd have to decide under the two-tax system is the preliminary question of which tax are we going to cut, one or the other or both. And you could imagine that there would be a lot of people who would be saying, well, I think we should cut the retail sales tax, because if we cut that, everybody gets a tax cut, and rich folks shouldn't object because they get a tax cut too, and in fact, assuming they consume more than other people, in absolute dollars, they get a bigger tax cut, so that's the only thing we're going to cut. We'll cut the retail sales tax, leave the income tax alone. If my guess about that is right, the distributional effect of that would be a lot less favorable to high-income people, to income taxpayers, than the actual dominant paradigm under the one-tax system. So that's one example. A second example is the home mortgage interest deduction, which you're going to hear a lot more about from Dennis in his absolutely definitive paper on the history of that. But it's true. But my point for the moment is that Dennis, I believe, if he says things similar here from what he writes in the paper, is going to end by telling you it's a terrible provision because of its distribution, well, its inefficiency and its distributional effects. I think the reason it survived, despite the fact that it has really kind of glaring, once you understand them, distributional effects that kind of ridiculously favor higher income taxpayers. The reason it survived is because it gets a lot of protective coloration from the fact that it shows up in a mass tax, and a lot of people think think it's at least potentially their deduction too. If you had a situation where the only people who were claiming the deduction were people paying the elite income tax, and you say, oh, we have to preserve this as a way of making sure the American dream of home ownership survives, and people could then turn around and say, oh yeah, home ownership for the richest 20% because they're the only ones who get any benefit from it, I think that would drastically change the politics. Okay. Third example, something else you're going to hear about a lot more, in this case from Ann later, the earned income tax credit. It seems pretty darn unlikely to me that the earned income tax credit, which is, as you may know, the largest federal anti-poverty program, would ever have been enacted in the absence of a mass income tax, because it relies totally on the income tax system for its administration. And while you can imagine, and Gratz talks about this in his articles, ways of continuing to do something like the EITC without a mass income tax, I don't think it ever would have happened in the first place without a mass income tax. And finally, the explosion of credits and deductions and exclusions for every conceivable thing that Congress decides to subsidize through the tax system. I don't think that would have happened to nearly the same extent either. It obviously couldn't have happened through the tax system, because if you want to subsidize activities by the bottom 80% of the population and they're not subject to the income tax, you can't use the income tax to do it. But I think largely it wouldn't have happened outside of the tax system as direct expenditure alternatives either, for two reasons. One is Republicans, not so much Democrats, but Republicans have this strong, almost moral distinction in their minds between tax cuts, which all else being equal are always good, and expenditure increases, which all else being equal are always bad. Subsidies embodied in the tax system are tax cuts and therefore good. Direct expenditure alternatives, if you don't have a mass income tax, are expenditures and therefore bad. I don't think they would have happened. In addition to that, you don't have the tax system ready-made as a delivery device. And in the absence of a ready-made delivery device for the subsidies, again, I don't think they would have happened. So my point is not necessarily that these speculations are right, although I kind of think they are, at least in their general direction, but rather that things surely would have been different. And so even if the initial distributional effect of a two-tax system at the end of the war had been the same as the actual distributional effect of the mass income tax standing alone, we'd have an awfully different in substance federal tax system today, but for Roosevelt's intransigence. And the payoff in terms of Presidentist Agenda is when you're thinking about whether or not you like Gratz's proposal, and I think it has a lot of attractions, but keep in mind the mere fact that it's distributionally neutral now and its main current effect in substance is just to get rid of 100 million unnecessary returns, that doesn't mean that it's, you know, distributionally neutral or a difference only in form rather than substance in the long run. Okay.
This is fascinating. I remember seeing an earlier version of it. And I think the historical question, so the first half of your paper, is, I think, the question of 20th century tax history, right? Why no VAT in the U.S.? Essentially, right, from a
Yes.
sort of comparative historical, it is a tax historian's version of the Warner-Somber question, right? Why no socialism in America?
Yeah, I mean,
why no VAT in America?
It's of course, it's not a complete answer to that question because VATs could have happened at other times too, but that would have been the moment. Where
Right. No. So it touches on that question, and so one of the possible explanations for the puzzle of why no retail sales tax might be having to do with the politics of fiscal federalism. And I think I may have mentioned this to you before.
Mm-hmm.
By the 40s, there are a significant number of states that have a stake in the retail sales tax. Not just a stake, but are actually lobbying to make sure that it remains their tax and doesn't get co-opted by the national government. And certainly this happens in the Nixon administration when they suggest a VAT to completely reorganize, as you know, school funding. And who is it? It's the governors who come forward and say, VAT, there's no VAT. The sales tax is a state government tax, and the federal government has no business being anywhere near it. So there might be this kind of fiscal federalism story in the 1940s that could explain why there's no retail sales tax in the 40s.
Yeah,
part of it.
I mean, I'm sorry.
And then to just follow up on the second half, there might be an interesting way to test your counterfactual from a comparative perspective, right? So there's lots of countries that have the VAT, we could argue, and have an income tax.
Yeah.
We could take a look at them and see how have they developed over time, and whether some of the conjectures or forecasts that you've mentioned, have they played out in these other countries?
Yeah. And I think the answer is they, for the most part, they do in fact have mass income taxes, but not as mass as ours, and also not with the this is a mushy concept, but probably not without the cultural significance of ours too. I think for the most part. On your first comment, that makes perfect sense. About the fiscal federalism concern, and certainly when the administration or other retail sales tax opponents were putting together lists of objections to the retail sales tax during the war, that was on the list. I didn't, as far as I can tell, it looked fairly make-weight though. I mean, I never saw anything from governors or state legislators saying you shouldn't do this. And again, to go back to I guess the most basic point, everything I could find about the sentiment of Congress is without the administration. Now, obviously they knew how to pass a tax bill over Roosevelt's veto when they really wanted to. So if the sentiment had been strong enough, then they would have passed it over his veto. But nevertheless, it seems pretty clear that absent the administration's opposition, the concerns about fiscal federalism or stepping on the state's revenue toes would not have been that big a deal. I think, and I don't, this next point I don't know enough to be sure, but I sort of get the impression that in the middle of the war people weren't worrying that much for the duration about the state's revenue raising capacities anyway. Yeah.
I wanted to ask about the plan that would have made the retail sales tax less onerous on lower income people, and I wonder if there was something in how that would have had to have happened that could have been part of the Roosevelt administration's opposition. Do I understand you right that the idea was that you would actually be giving vouchers or something to people in a fairly low income level for specific products?
For anything subject to the tax.
So that's right. But for anything that is subject to the tax, the government would then go in and decide which of those constitute sort of essentials.
No. I mean, no. It would just be the amount you spent. So if the exemption level was $624, you'd be given coupons which would allow you to in effect to pay the tax on $624 worth of purchases on anything otherwise subject to the tax.
So it didn't matter what you buy.
Correct, as long as it was taxed. Otherwise taxed, yes.
Right. You could be buying eggs and milk, or you could be buying a stereo. I mean, it wouldn't
Now I can, but I should speak. That's a great question. Let me elaborate on that a little. That it concerns. Let me make actually 2 points. some people wanted to take this even further and say that you would pay all your tax through coupons rather than through cash. So if you wanted to make subsistence level purchases, you'd go get coupons for free up to that level. If you, and then you could replicate something like a progressive consumption tax through coupons by saying if you want to buy another, making up numbers here, $1,000, next $1,000 of purchases, you can buy more coupons and you have to pay 5% of $1,000 for that. If you want to make another 1,000 on top of that, you can buy more coupons, you have to pay 10% for that. The objection to that, which I think is absolutely right, is that would lead to tremendous trafficking in coupons. People also made that, but all you needed to do really to replicate the victory tax was to have subsistence level free coupons. Some people complained about trafficking in coupons as a problem with respect to that as well. But that strikes me as a fairly silly concern, because the only way you'd have anything left to traffic in is if you were spending less on otherwise taxable consumption than subsistence, and you don't think that would have happened much, and to the extent it would have, really, who cares at that level? Now another point is, it's clear from our perspective today that a better way to do this is just to give everybody cash equal to the tax on subsistence consumption, and then you don't have any trafficking problems, and that accomplishes the same goal. Nobody even mentioned that as a possibility, and I don't know if that was a failure of imagination or a concern that as a political matter it would seem too weird in the middle of a war with a huge federal finance problem to start handing out large amounts of cash to people. But,
I had a question very similar to his about the operation of the coupons, which is, we'd already had rationing coupons for quite a while at this point in time when they would have been talking about it, or not yet?
Well, you probably know more about the dates on that. Okay, well, coupons started getting talked about in '42. I don't really know when.
Well, and so if we had had a bad experience, not just with trafficking in rationing coupons, but also with counterfeiting in rationing coupons, okay? The problems with counterfeiting and rationing coupons are bad, but not impossible. The problems with counterfeiting in retail sales tax coupons means the government doesn't get the revenue. It's just across the population, it isn't doing what it's supposed to do. When you have counterfeited rationing coupons, it's a much bigger problem when you've got, and nobody's going to be talking about it because nobody wants to admit how big the rationing problems are, because everybody's going to bail on the whole rationing price control regime if they realize how bad the stakes are. I am speculating.
Yeah,
I mean, has anybody done a history of the rationing and how
probably
it all worked?
I don't know. Let me say a couple things to that though. One is that the concerns that were actually expressed about coupons were, and in a way this is all kind of silly because at least in 2009 it seems so obvious to say just give them cash, solve all the problems, but. The concern that was expressed about the coupons was in terms of trafficking. The notion that you're supposed to use them yourself, but you might sell them to somebody else who's in a higher bracket than you are. I can't recall seeing any concerns expressed about counterfeiting or anybody. Yeah, I mean, and in recycling, the other thing I was going to say as a response to counterfeiting, maybe it's not a response to recycling, is they've had paper money for a while, and they didn't seem to think the counterfeiting problems were that awful with respect to that. I don't know why they should be that much worse with respect to coupons, but they might raise worse recycling problems because cash is supposed to be recycled and coupons aren't, I guess. But I guess the main point is those could have been pretty serious, legitimate concerns. It clearly wasn't what was bothering the Roosevelt administration.
Or what you can find out is bothering.
Well, maybe, but why would they not make their best argument? I mean, they'd have no. Well, you think they're okay. You think they're hiding.
They admit that the rationing is
Yeah.
working the way
Well,
they
that's
said it was.
who knows. That's non-falsifiable, right? Because, I mean, yeah, okay. And
So, following up on AJ's thought about running the counterfactual, it's hard to do it, as you say, across countries because the culture of tax cuts and things is so uniquely American. But I wonder if you could run it, so I'm thinking, your basic thought is that the politics of a class tax are just different. It's harder to make cuts, it's harder to make it, import lots of privileges and tax expenditures. So I wonder if there are two places you might run it. One is in the federal estate and gift tax, which is a class tax and has been a class tax. My impression is that it's fairly clean along those lines. Except for, in the last 5 years, we had this campaign to sort of cut it, but that's sort of another story.
But even then, it was a fairly clean cut.
Yeah, exactly. It's sort of get rid of it. But it's clean, and the classic problems are the problems of evasions by the wealthy, right? Legally advised evasion by the wealthy. So I wonder if that fits. I wondered about the state level. I mean, there are states that get most of their revenue from retail sales taxes. And so what do the politics, not that you could do this in this paper, but in the next 12 papers that you write, what are the politics? Can you see
State by
systematic
state.
trends? Yeah, systematic trends, or students interested in papers. What are the politics of tax policy in states without mass income taxes?
Yeah, that's a great question. I mean, there's Washington, Texas. Dennis? Did you?
Well, I mean, I sort of share Ajay and the fiscal federalism issue. I mean, it sort of was hitting me upside the face, saying, I can't believe that the states in some sort of form or another, maybe not the governors, I mean, it's not quite as well mobilized at that point. The states have, I mean, even then, states have a long-standing, I mean, even Wisconsin probably was I imagine, getting particularly upset with respect to the incursions on their source of revenue. And so, I mean, taxing the same base twice.
Yeah,
that was one thing. I mean, maybe it's just not there.
It makes sense. All I
Yeah.
can say is I didn't find it, and similar to the response I made a minute ago, if that's what they were thinking, I don't know why they wouldn't have said it. I mean, it's not the kind of reason like Charlotte was suggesting that you'd have reason to keep hidden. But anyways.
Yeah. I mean, not as an argument against it from the administration standpoint, but the fact that the states weren't picking up on it, it seems a little myopic. But and then with the, I know. There was Joel Summerall did an article a couple of years ago that was, Newcomb, I think was her name. Who was the economist?
Mabel Newcomb.
Yeah, Mabel Newcomb did a
Survey.
Yeah, did a survey of economists in the 1930s, which is comprehensive and fantastic, and Joel reproduces it in a National Tax Journal piece, and basically surveying the different kinds of taxes, and do you not like, why do you not like, and the national retail sales tax was, among economists, they hated it. And there's some discussion in there about why they may or may not have hated it. They hated it definitely from an equity standpoint, but they also hated it from the standpoint that, unlike an income tax, it's not an automatic stabilizer, economic stabilizer.
Yeah. To some extent, at least, though, that's asking, for my purposes, they were asked the wrong question.
Yeah.
I mean, they should have asked about how do you feel about a mass income tax standing alone versus the combination of a class income tax.
Yes, right. But then I'm sorry, lastly, with respect to the EITC needing the mass income tax, I mean, absolutely. I remember a few years ago remember Roy Blau told us when I was doing some research on like the intellectual history of negative income taxation, and he looked at me like I was some sort of complete moron. Because I said, well, how come you guys didn't think of this during the 1930s? And he's like, well, because how can you possibly add progressivity from the bottom up unless those folks are actually paying taxes? At the time they couldn't think of the refundability issue.
Yeah.
And so, I mean, you're surely absolutely right about that counterfactual.
Boy, I can, if I can just cite that, I can shorten my paper by about 5 pages.
I actually have it on.
I spent a lot of time chewing on that question. Thank you. Got time for one more, I guess? Yeah. Or if not one more, then we're exactly, yeah.
So, speaking of your counterfactual today, I was thinking about people that aren't taxpayers today don't necessarily have to have status in the United States, permanent or citizenship status. If it went to a retail sales tax, if it were today a retail sales tax and a class-based tax today, have you considered how that would affect those sorts of undocumented or visitors or any sort of thing for that? Because they wouldn't be getting coupons. These people who today get they don't get EITCs, but they get other sorts of exemptions. They wouldn't be getting any of that under a coupon.
Yeah, no, you're right. There could be substantial differences in today. That certainly wasn't an issue anyone was raising then, but from a presentist point of view, it's an important question. I also think, for what it's worth, and this would, part of one of the things I would encourage people to think about before signing on to Gratz's proposal is although income tax returns cause a lot of problems, I think they make people feel like citizens an awful lot more than paying a sales tax. When you claim that I have a right to be heard, by public policy makers on this issue because I'm a taxpayer, you're not talking about the retail sales tax. Right? Okay. I see time is up, so I will thank myself and.